Good afternoon, everyone. I'm Helen Avery, Head of Nature Programmes at the Green Finance Institute, and we're very proud to be supporting Nature Scottish Government and National Lottery Heritage Fund on the FIRNS as part of their engagement programme. So you may have come to several of these webinars already, and this is the final one of the series focused on how you engage with buyers. And obviously that's absolutely vital if you're going to have a project that has private sector finance and investment in it. So we've talked about how to engage with sellers. We've talked about a baseline, so you know what to sell. And this is really the one where we find out how to attract those all important buyers. So I'm really delighted that joining us today to sort of share their experience and then also take your questions are Samuel Welsh, who's project manager at Forest Carbon, Tony Price, who's business development manager at Moors for the Future Partnership, and Sarah Brownlee, who's the project manager at Wilder Carbon. So we'll be, as I say, talking a bit more in detail in a moment and then taking your questions. Please do post them in the Q&A section. I also always keep an eye on the chat. We post links in there too, so I'll keep an eye on that. But I want to leave time for those all-important questions of yours. This is all about supporting you in your application and development of your project. We are recording it. I know, as I said before, we did change the time on this one, so hopefully that means that others who are missing this time can catch up. But with that, we do have a poll. We'd like to sort of understand how many of you are interested in applying for FIRNS or going to be applying for FIRNS. So if I can just ask you to quickly fill that in, and then I'm going to hand over to Patrick Jean-Martel. He's the Environmental Green Finance Manager at Nature Scott. I'm sure many of you all know him already, who's just going to remind us of the timeline of FIRNS and the application process. So over to you, Patrick.
Thank you, Ellen. Hi, everyone. And yeah, thank you, everyone, for showing up to this last FIRNS workshop on an important topic that is often a concern for many projects, and that's for good reasons. So the FIRNS is here, as you know, to promote innovation and support the development of these new business models emerging around natural capital projects in Scotland, and of course, in line with the Scottish Government's principles for responsible investment, and in particular, promoting a just transition. But the truth is that you're currently making this happen. You are the ones thinking about how to make this happen. Trailblazing is never easy, and there is a lot of unknowns and lessons to learn around creating these new revenue streams and around natural capital in general. So we can only truly sell what we understand, and when we see the value for ourselves and for others. So for natural capital, we obviously see the value for the restoration from an environmental perspective, but it's often difficult to harness the potential value for private sector's buyers. Why would they pay for something that they haven't never paid before for? Their business model has nothing to do with us. Why should they give us money, or why should they want to pay for what I'm doing here? What's going to happen anyway here? Ultimately, these are questions that you will have to find an answer to if you want to be able to effectively engage with private buyers or even investors, as it is often the core of the business model you're trying to develop to make natural capital restoration financially viable and attractive. Luckily, we have some experienced people with us today to help us figure this out. The exciting aspect of this is that anything is possible, as the demand for contributing to green and socially responsible projects is high. The most obvious situation would be around some nature-based solutions that are generating targeted outcomes that will directly benefit third parties in terms of reducing costs. So for example, natural flood management, paying a higher cost today will lead to reduced costs in the future over the medium or long term. But it could also be water quality or water temperature for a business or factory relying on it. So this is where climate change impact modeling can be, for example, a good way to find opportunities. Creating long-term resilience against climate change is going to become more and more prevalent for businesses around the world. For now, many businesses are oblivious of their business for their business, and I suspect that the time scale are the main reason for that happening, as business owners don't really think beyond their own ownership duration, if I can put it that way. But the truth is that we will probably see stronger impacts over the next decade or two, so it will become more relevant. But that's not the only reason the private sector is interested in natural capital. I would say that the main driver today that can also combine very well with the nature-based solutions that I just mentioned is ESG reporting requirements, or green credential, if you will. Businesses are all about creating a revenue stream and then managing risks, all possible risks. So one of the major one today is reputational risk. Companies want to do the right things, sometimes because it's within their core values, but sometimes it's because they are pointed out in a bad way. They will lose clients, support from investors, or even banks, and this will snowball in a very damaging way. So, for example, the Task Force on Nature-Related Financial Disclosure, or TNFD, is working on a voluntary reporting framework that's going to be probably designated as one of the mainstream to do this reporting, and that will show the way on these nature-related financial disclosures. So the businesses in their annual reports, they want to show their overall environmental and social impact under a good light, maybe even showing a positive balance. We're talking about carbon, of course, but biodiversity is to become key, and any other environmental improvement will be relevant in that context. So you must believe that they're currently willing to spend a considerable amount of money for that. And that's where you come in with your project and story. And like I mentioned before, in that context, you will be basically selling data and the exclusive rights to claim that data for the annual reports that these businesses are preparing. Once you're convinced of the value of that data, it will be much easier to look for prospective buyers and pitch them. Hopefully this webinar will be helpful for you to figure this out and your preferred approach on all of that. So now, regarding the FIRNS process, the timeline, you have now all received feedback on your expression of interest, and I recommend that you work on the full application, as the deadline of the 16th of June will be rapidly approaching. Also, we were going to have 2 applications clinic sessions. One will be on Wednesday, the 31st, I think, and the next one would be on the Thursday, the 1st of June. So make sure that you have your questions ready by then. I think that's it for me. I'll now pass it to Samuel Welsh from Forest Carbon, who have been dealing with buyers for a while now, and whose insight will be very interesting to hear, I'm sure. Thank you.
Great, thanks, Patrick. I'll just share my screen. Give me 1 sec. Hopefully you can see this. So yeah, I mean, I'm Samuel Welsh, project manager at Forest Carbon, and myself and Steve, one of the directors, run our demand side or buyer side division within the business. So just to firstly give you a bit of background on, I guess, who we are as a company. We founded back by our directors, Steve and James, 17 years ago, and we were the first developers, or one of the first developers, of UK land-based projects using carbon finance. And since then, have remained one of the most active within the kind of UK voluntary carbon market space. So you'll see here, we've helped plant over 225 woodland creation projects and restored 5 peatland restoration projects across the UK and Ireland, and have many more within the pipeline and coming through the kind of early development phase. As part of that, we've kind of acted as the pioneers in helping architect the governing standards to date in the market, to provide that kind of robust third-party assessed assurance of the projects that we work with. So you'll see here, it includes the Woodland Carbon Code, which was set up around 2011, and the Peatland Code around 2016, 2017. And we took the kind of core principles around best practice in the international voluntary carbon market and helped effectively establish that within kind of UK methodologies. So we've been a bit of a kind of test case for the certification and validation and getting the first projects through both those recognized codes. And even today, we kind of remain and continue to try and position ourselves as an innovator in the market. So we're working closely to align ourselves with what we do in terms of emerging nature-based carbon standards. So looking to utilize the likes of soil carbon, blue carbon, agroforestry, as well as also mentioned biodiversity. And all falls really within the kind of UK and global targets to achieve net zero and reduce our impact on the environment. So I'll just quickly brush over this slide, but a few of our impact figures that we're kind of proud to showcase from our role in supporting the kind of UK ecosystem services since our inception 17 years ago. I touched upon it, but a really important part of the market is the kind of core principles, and these are fundamentally to ensure buyers of the integrity, quality, and transparency of the projects that they're investing in. So being able to stand by the kind of environmental and social claims that the projects are achieving. So this is things such as additionality permanence, key to kind of any project wanting to access carbon finance. All our projects to date have gone through those two mentioned codes, and we also work with projects abroad that we retail credits from. And again, these go through the highest quality internationally recognized standards, such as the gold standard, Vera, Plan Vivo, again, following those similar principles to what we see in the UK markets at the minute. And the standards then sit within a kind of global accounting registry. So this is where you can kind of publicly list carbon credits that can then be fulfilled via transfer, assignment, or retirement. So therefore, effectively, transparently showing ownership and ensuring no double counting activity within the market. So how do we engage with buyers or prospective buyers? So fortunately, we set as kind of pioneers in the market, which works to our advantage, but we also along the way have kind of diversified the experience across our team. So we've hired from multiple kind of disciplinaries such as land surveying, farming and agricultural, forestry sector, and the international carbon markets to help us kind of best engage with our target audience from landowners through to buyers. And that's enabled us to kind of recognize business needs and how, I guess, they think as either private or public sector companies, and keeping engaged with the kind of latest developments around legislation, policy in the market, as well as sustainability reporting and standards that they're working towards. And this isn't just working across the board, but recognizing kind of various sector-specific requirements. So some companies can be, for example, within industries that are cash-rich with low emissions, or vice versa. Therefore, you have to understand the buyer and where they're coming from, and effectively whether there's different internal carbon pricing setting versus emphasis on project quality or working with a certain type of partner, for example, a charity or a for-profit company. Education, and I highlight this is probably one of the most important parts of engaging with buyers, but what we find with many of our buyers is that the relationship building part is almost a more kind of powerful tool than, for example, cost of the projects themselves. So we're working in a fairly niche market at the minute. It's in its infancy, and there isn't a whole huge lot of kind of knowledge base out there, even within kind of sustainability executives of the companies. And much of what their interest lies is in the kind of holistic reduction strategy and in-house. Therefore, it's really important to be a kind of partner that can guide them through what meets their requirements in terms of that kind of compensating for potentially emissions, or whether that's CSR driven. So being a close partner to take them through that journey and help them present any decisions kind of up the hierarchy to influence the final decision makers within the organization. And that process can take a long time. In a UK context, because projects deliver over a longer time period, it can be a difficult sell in some circumstances. So whilst you have the advantage of local projects on your doorstep that potentially buyers feel more confident in, they may not deliver the immediate climate or carbon benefit that an international project may achieve, and therefore may not exactly fit within the kind of sustainability reporting guidelines that companies are working towards. So what I think we've adopted is a kind of approach where we look to integrate it within a best practice portfolio approach. So allowing them to kind of take on a multifaceted approach where they're supporting, say, UK projects with longer term delivery timelines, but potentially aligns better with their brand, their location, and cost, whilst then matching that up against international projects that help them deliver against more immediate or near-term impacts. I think here, understanding the kind of market mechanisms. So obviously we don't act as a kind of financial advisor, but we do use our knowledge to help buyers and landowners position themselves correctly in terms of the right price and potential kind of speculation of price change in the market. So using our historic knowledge and what we sold at to help guide that decision. So there's still lots of talk around kind of price expectation continuing to rise. And it's obviously kind of demand supply driven. So whilst we see buyers taking advantage of what they think is potentially still low pricing, and in some instances, we also have buyers that are reaching that upper threshold, and therefore internal abatement of emissions becomes more efficient, which I guess is where we ultimately want to be in terms of setting a kind of carbon price. As a small independent company, we can remain nimble and agile, so working with varying buyers and projects, and we can cater to varying payment structures, contract types, and as a for-profit company, we have that ability to work nimbly in order to kind of scale ourselves up as a company as well, and effectively scale up our impact. And lastly, making buyers aware of the risks involved. So from pricing to changing market landscape, which again, all falls under that kind of relationship building. So I think a big part of that is being truthful about potential risks involved and being open to admitting that sometimes we may not be the best fit in terms of partner, but that often kind of then resonates to building up that trust and allows them to make the right decisions in the end. So lastly, just a kind of brief over this, but a few of our partners that we've worked with to date across obviously multiple industries and of varying scales. But I think that's it from me. I'll hand it over either back to whoever's running or on to the next one.
Thanks, Sam. That's great. It's a very impressive list of partners as well. Thanks for sharing all this, logos. It's really helpful to see where the interest is. I wonder, before we go to Tony, if you could just share with us, what are the buyers that are approaching you? Because obviously you act as a broker and you get a lot of incoming. The buyers that are looking for UK projects in particular, or UK carbon credits, what is it? Are there any similarities in what they're looking for? Is there anything we can sort of glean that would be useful for those applying to FIRNS to know?
Similarities between, sorry, UK and...
Yeah, I just wondered if, well, it was sort of, are they, were there any sort of trends that you see among buyers that particularly are targeting UK projects? So do they tend to be looking for something local perhaps, or is it sort of a CSR type play? And I'm just keen, I'm sure they're, as you say, they're very different and have different motivations, but it'd be great to sort of understand specifically incoming for UK projects, if there are any consistent themes.
Yeah, I mean, it's changed over the years. So I think historically, we saw our original contributors predominantly CSR driven, so effectively doing good for the reason of doing good, and I guess capitalizing on any environmental marketing value that came with that added either premium to themselves or the goods or services they supplied, and it differentiated themselves from those competitors. But I think what we've seen in recent years is obviously a growing awareness globally around climate and biodiversity, and a greater emphasis around carbon footprint accounting. And there's been a somewhat shift with the emergence and definitions of carbon neutrality and net zero towards making those pledges and align themselves with science-backed targets. So they often want to kind of purchase credits as a means of compensating to neutralizing their environmental footprint and within the media future. So I guess a big part of that incoming inquiries is the challenge that they don't often realize is UK credits. There are very few kind of verified credits in the market at the moment, because location, climate, species type isn't as favorable as what it can be around the world, or at least not as scalable. So we often see they come to us and we take them through the education process, and there is often, I mean, it goes back to that kind of portfolio approach we talked about. They may have a pledge that they need to hit, and therefore international credits might be a feasible way to do that. But then often they want that additional kind of brand alignment through with their customers, their employees, of supporting projects locally, and not just from a kind of carbon point of view, but from the other co-benefits around biodiversity, that sort of thing. I think a final point, kind of going forward, what I do expect from this space and what we're starting to see already is more kind of larger financial investments coming from the likes of asset managers and financial institutes, where they're going to come in and hedge on the market for commercial value, drive and scale up the market, and then potentially then sell the benefits of that, any projects that they're investing in now, within the kind of latter part of this decade and into next decade, when those definitions of kind of net zero, those pledges of net zero come into effect.
Mm-hmm. Brilliant, thank you. And just a final point before we go on. I mean, are we sort of positive about the appetite for credits in the UK? I hope so. And this is what we're trying to do to G up that demand side from the perspective of the Green Finance Institute. But I mean, we're not saying we're setting up projects and you won't find buyers. I'm assuming we will find buyers for projects.
Yeah, I mean, obviously that last point that I made around the kind of financial houses and asset managers being a big driver, I think we're going to still see obviously a continued trickle and increase through kind of typical corporate SME buyers, but it'll be probably those bigger companies that will drive the kind of immediate development of projects. So I think what we will see is a shift in the kind of typical contract types we're seeing in the market at the moment to kind of account for this longer term delivery of those projects. So I think there is a lot to be positive. I think there's always recognition that it's not just global, we can crack down on kind of UK. And I think the final point is, and mentioned by Patrick, biodiversity is going to be huge, and it's so closely interlinked with carbon and climate that the two, how they work together, and I'm sure Sarah and the World of Carbon guys can talk more detailed about it, but we're going to see those driving them like together and kind of pushing one another on, hopefully.
Yeah, brilliant. Okay. Thanks very much, Sam. We'll come back to you in a moment. Sarah, so coming to you, World of Carbon, so much to talk about. You've just had a successful buy, you've been working with buyers. So it'd be great if you could just sort of share us a sort of brief intro, and then we've got some questions for you.
Absolutely, yes. I just have a couple of slides, but a quick intro. So essentially, I work for Kent Wildlife Trust. I'm Director of Development of Kent Wildlife Trust. Incubated within that is now World of Carbon Limited. Over the last 3 years, we've developed a standard, the World of Carbon Standard for Nature and Climate. And that was focusing on basically creating a new mechanism for locking up additional carbon through the restoration of native habitat via the reinstatement of natural processes in the UK. So that was looking across a range of UK native habitats, harnessing their power as a functioning ecosystem to lock up carbon for years and years to come. So we went through a huge design and development process, essentially creating this standard that would generate carbon units to finance nature restoration projects in the UK. So that's what we've done. And the whole process, as I mentioned, took 3 years to set up the governance and the design to make sure that, as Sam was saying, we're really addressing these kind of key issues of credibility and quality and assurance and integrity from end to end. And a lot of that time was also spent nurturing partnerships, identifying and assessing our buyers. I'll share my screen here. A large part of the standard has got, can you see those slides? Are we working?
Yeah, it's coming. Yeah, it's
okay, fantastic. Okay, and if I go to slideshow from this slide, so part of the standard, section 2.3, is about our unit buyers and about who we want to see matched to these nature restoration projects in the UK. So as Sam mentioned, we're very much working off of a kind of estimated issuance unit model, where we estimate how much carbon a project is capable of locking up over the 50-year duration of the project, and a buyer can make a strategic purchase to buy these estimated issuance units to use them at a later date when they've been retired, when that carbon lockup has been verified. And so it kind of supports a journey towards net zero. And so it's going to be a strategic purchase to support a later environmental claim. We're very much selling the carbon, but we're also quantifying the biodiversity uplift. And I'll come on to that in just a moment. That seems to be quite an important part of what buyers are looking for at the moment. We will at some point probably treat it as an explicitly bundled unit where we're selling that biodiversity uplift as well. But at the moment, there's no framework by which a corporate can meaningfully claim that biodiversity uplift and impact, because there's no kind of benchmark or framework of how they're currently assessing their impact on the environment. I won't go down that road. So assessing our buyers. So within the standard, we have prerequisites, eligibility criteria for our buyers, very simply fleshed out here, but there's a much more detailed document about how we assess our buyers, which I can link to next week. So we need them to be UK companies. We need to be looking at UK impact and UK businesses who are looking to address UK emissions. We want these UK businesses to have a public commitment to achieving net zero and a robust, credible plan of how to achieve net zero that follows a recognised criteria from science-derived targets. So it could be SBTi, it could be others. There's lots of kind of proportionate standards that companies are matching to help them design their net zero strategies. They need to commit to timely submission of due diligence information around their strategy. That is going to be looking to minimise their carbon footprint and also delivery against their carbon reduction plan. So as well as MRV for our projects, the standard also requires MRV for our buyers, who are going to need to be submitting evidence around demonstrably reducing those emissions and suitable use of the carbon units that they're purchasing. So those are our requirements. And I think it's important to say that everyone's going to be on their own journey, everyone's going to be on their own sort of path, and we're going to be working with a range from the small businesses with low carbon intensity, low resources, right through to massive organisations, huge carbon intensity, lots of resources. So what we need to gather in terms of evidence has to be proportionate to who we're dealing with. We want to be, we want businesses to show how they're doing their best with the resources they've got compared to the carbon intensity that they're dealing with, and the size of the businesses that they are. So it needs to be proportionate. So it needs to be kind of assessed, and there needs to be a case of judgment applied. So these are our requirements for buyers. When we started to design the standard, there was a whole kind of operational infrastructure that we had to develop, a new business. It was a startup, and so we had to create, as Sam said, get our ducks in a row with all of the how is it going to work, what am I buying, how is it going to work. So we needed to make sure that we had all of our standard terms and conditions of what they're purchasing, and also agreements that we will enter into with our approved buyers for them to maintain their approved buyer status against these standard requirements, but also that they have access to purchase units from across the portfolio of projects. And the terms and conditions set out what they're buying, how they can use it, what happens if I don't get what I'm purchasing, and just all of the kind of elements that need to know about the product that they are buying. So that's all available on the website. You can have a look at that. I'll share links. I won't go into the detail. Feel free to use it. Feedback on it, please. It's all a work in progress, but hopefully it would help in the development of your projects. And just a bit about the sort of, this is quite a small analysis that we've done on people that we've approached to purchase units from the projects, the Wild Carbon projects that we've been developing. The first 2 projects were validated last October, and we've completed our first sale last week. So as Sam said, it takes time. You are nurturing a partnership. You're not just selling a bath bomb. You know, it's a real investment into a natural climate solution. So it really does take a lot of nurturing and kind of getting them to buy into the project and what you are doing. So you're not just selling a carbon unit, you're selling the project. And so when you're thinking about the skills and who you get to actually sell the ecosystem services from your project, don't underestimate the project team and the people who have been kind of designing the management and the monitoring that will take place of that project. People really buy into that. So just a bit of an analysis of who we've approached so far. These are completely cold approaches. So we haven't included people that have approached us because that kind of skews things a little bit. So these are completely cold. 57% didn't meet the eligibility criteria. So this is largely down to them not yet having a finalised net zero commitment or a strategy or carbon reduction plan in place. So there's a huge chunk here. There's a gap for kind of getting people buyer ready. So people who really need to have mapped out and questioned their own emissions before considering to purchase carbon units. Only 3% thought that we were too expensive. So we are selling our units for £75. Bearing in mind it's the carbon, we're selling the carbon unit with the kind of carbon plus benefits on top. They're not actually buying a biodiversity unit, they are purchasing the carbon from a nature restoration project. Only 3% thought it was too expensive. So companies who are taking action to reduce their emissions and are in a position to purchase units from the UK, they're willing to pay. So don't undervalue your assets, you know, really think about how much the project is going to cost, how much you need to leverage to sustain your project into the future, and make sure that you go out and you sell that to people and you tell them what it is that you're going to achieve through the product that you're selling. So only 3% thought it was too expensive. 12% were operating on a year-by-year basis for their offsetting requirements. So that's no good. Our estimated issuance are not going to do the job to offset this year. It's a strategic purchase for a future claim. So 12% needed verified units right now. And there is a lack of that in the UK. So, you know, in sort of 5-7 years time, when we've kicked off all of these nature-based carbon units in the UK, and we've got much more verified units becoming available, they'll be in demand. So lots of people who are operating on a year-on-year basis, we're working with them, we're talking to them about purchasing upfront to secure that future demand, either under offtake or using the estimated issuance unit model. 3% wilder carbon, not an internally recognised standard. So a lot of kind of national organisations have internal boards which set who they can purchase offsets from, and we're not yet there. So we're pursuing internal advocacy, and that's about strengthening the wilder carbon credibility in the brand. 2%, we don't have a CROA. You can't talk about a CROA until you are a CROA. This is an internationally recognised endorsing standard, which I think anyone considering setting up a code or anything relating to carbon, even if you're just positioning yourself as a carbon broker, a CROA is a good one to pursue. And 23% we are therefore pursuing. And so just some kind of takeaways and some key positives from that. Buyers are really loving the nature. They want to invest in projects, UK nature restoration projects. So they want the detail of the management approach that you're taking, the habitats that you're supporting, the grazing strategy. You know, they really love the approach that some of our projects are taking to wilder grazing. The fact that it is UK, they do want a homegrown project. They want to be able to go and visit. They want to put their logo on the sign. They want transparency around that. They want to be able to really see the project that they're buying into. And they really do care about their reputation, both from a risk perspective, but also being seen to do the right thing. So protecting reputation, but also bolstering reputation. There's so much that I could go into around their customers buying into them because of what they're doing and how they're supporting UK nature, and also talent, attracting employees that work for B Corp organisations, and companies are doing the right thing in terms of offsetting. So really showcasing good use of units and supporting UK nature, and association with ENGOs as well. We work a lot with our trusted deliverers, environmental organisations who have that track record and credibility in safeguarding nature. That affiliation with those trusted deliverers is going down well. And so just a few takeaways. I'm conscious of time, but so buyer badging, promotion, be transparent. Let's not give in to green hushing. Net zero strategies and planning support to get them buyer ready. Start talking to them now, and they might be ready to buy in a year and have all of their strategies in place. Sales training, it can get very deep and technical, and it's really important for people to have a good understanding of the product, as in the project they're buying into, and the end-to-end mechanism, how it's all going to work and what they're purchasing. More profiling of the project deliverers, who's delivering these projects is needed, and advocacy and profiling of the credibility of our standard is what we will need to do. So do have a look at the World of Carbon website. It's got all of our legal agreements, terms and conditions on there, or have a chat with us. Follow the World of Carbon standard for your project to leverage the carbon finance.
Sarah, thank you so much. There's so many helpful insights you have there on what buyers are looking for, and and it's pleasing to hear that it's the story, it's the transparency, and it's a really good point you make about, as you're thinking about not only just identifying your buyers and deciding who you're going to sell to, but actually thinking about not just what is good for you to give to buyers, but actually what kind of buyers you really, really want. Do you want buyers that are high integrity? And obviously that's something you've chosen to do. So I'm going to just switch to Tony, because I'm conscious of time and I want to allow time for questions. And I know, Tony, you don't, it's not necessarily on your radar. You're a different type of project in that you're maybe not looking for those really as rigorous buyer standards. Correct me if I'm wrong, but anyway, there's so much to talk about with your project, but just sort of let people know listening. Obviously, we'd all love to be encouraging buyers to be the most high integrity that we can get, but it's up to you in your project who you choose to sell to. So just want to make that clear. Brilliant. So Tony, how are you doing with your slides?
Can you see anything?
Not yet.
That's strange. That's strange. Okay, we'll leave it there. So
we'll send them round afterwards as well, yeah, Tony.
It was only a couple for the start of what I was going to talk about. So most for the future, we're a partnership organisation administered by Peak District National Park Authority. We've been doing restoration and conservation for over 20 years and have raised over 50 million to deliver 35 kilometres of upper moorland peatland restoration over the Southern Pennines and Dark Peak over that period, some of the most devastated peatlands in Europe due to industrial revolution and chimney pots burning coal fires right up until the 1980s. So we're experienced on this. As I said previously, we routinely deliver £3 to £4 million worth of restoration and conservation every year. We're part of the Great North Bog Alliance, and that's a UK landscape scale initiative supported by the 6 leading peat restoration partnerships in the north of England, who are all coalition partners. And we've got a combined 80 plus years of experience of restoring the most degraded upland landscapes in Europe. And there's still a huge job to do, but with access to substantial public sector grant and charitable trust fundings, and the IUCN Peatland Code, we can offer a compelling opportunity for private sector's partners to support environmental restoration at scale, and that's what I want to talk about really. So we've taken I suppose a disruptive slash contentious probably approach to how we're going to achieve this, and that's mainly been driven because over the last 2 or 3 years, large corporate private sector organisations have been knocking at the door, have been asking, when is the Great North Bog Alliance going to be an entity that allows those organisations, those private sector organisations, to invest at scale in a UK restoration and conservation project that delivers carbon credits in the millions of metric tons, and that's what they want to invest in. Because the 6 organisations are all administered by individual either national park authority organisations or wildlife trusts, it's for us to be able to go and get all our ducks in a row before going out to the private sector would be a huge exercise, and that's what we've found over the last 2 or 3 years, is that it's a very unwieldy alliance, if you like, and to get approval and consent from 6 separate administrative bodies, and prior to speaking to the private sector would be, we doubted whether it would happen. So we took this initiative because to go out to the private sector by issuing a prospectus and an expression of interest that is deliberately loose and deliberately allows the private sector organisations to influence how the alliance may be structured in terms of its entity in the future, because at the moment it's an alliance, it's not got a company entity, and that's something that we've actually asked in our questions to the private sector. How would you prefer the entity to be structured, so that we're not doing the wrong thing before before we actually get that private sector money and start putting barriers up before we've even started. In terms of the landowners, which I know I was at the Flow Country seminar and spoken to a lot of organisations who, quite rightly, in some ways have made sure that the landowners are fully engaged through communications and engagement prior to the private sector, reaching out to the private sector looking for buyers. Yeah, we get it, but we feel that we know most of the landowners in the Great North Bog area through the work that we've done with them over the past 20 years, and we even know the ones that don't want to work with us for whatever reason, for their their grouse shop moors, or they want to do it themselves, or they've got land agents that want to do it in a different way, and we accept that, and we feel that if we can get some traction with the private sector, if we do get responses to the expression of interest, and we can engage with some large corporates and financial institutions, it will make and take them to the next stage prior to going into any sort of commercial agreement or discussing contracts. It gives us a much better leverage to take to our administrative organisations and to take to landowners when we engage them. If we can say we have got company A, who is a global organisation with a with £1 billion turnover, who have got who is showing they've got the right ESG governance in place, that are showing that they are taking the right steps towards driving for net zero, and that if they're a UK based organisation and they want to spend their money on UK projects that have a tangible benefit to UK PLC, and that there's also a compelling story around this. The one thing I've taken away from the speakers before me and the last 2 or 3 conferences I've been to over the last couple of weeks, it's all about selling the story. It's all about the brand, as Sam and Sarah have both said. That's the value of those carbon credits to these large corporates now. It's not to get burned. It's to make sure that they're doing the right thing. Not to fall foul of getting it wrong. like some organisations, IKEA, we could mention, for one, with their trees in New Zealand, and it's very much, we feel the story of the Great North Bog, with the reason why that peatland was, was devastated through, people not knowing it was down to the Industrial Revolution. It was down to, farming practices in the 30s, 40s, 50s, and 60s, and the amount of coal fire that that's been burned, over that area, and it's, we've proved that it can be regenerated. We proved that it does work, the restoration and conservation techniques that we use, and now we just, and so we think that is super valuable to the large corporates that we're engaging with. So our plan, if you like, is to see, we'll find out how many we get on the 31st of May. Ideally, Nirvana, and we don't know. It would be if we got substantial, let's say, in the dozens of responses, and we were then able to sift those down through looking at their ESG and their CSR and the TNFD, criteria to 3, and then put those 3, 3 chosen organisations onto a framework. And then as individual projects come up to the Great North Bog members, allow those 3 organisations to bid for the carbon credits on those projects, registered with the IUCN Peatland Code, or even the Wilder Carbon Code. We've put that in the prospectus that we're not, we see the Wilder Carbon Code as a bona fide code that if it fits the buyer's criteria, then absolutely we would showcase that as well. So we're fairly agnostic whether it's IUCN or Wilder Carbon, but that would be Nirvana, because then that means that they will bid and the price of the carbon would potentially rise. The other alternate to that is that we get one Aviva type organisation who sweeps in and says, here's 50 million, we want it all. And then obviously we need to look at that in a different way. So that's where we are, and we'll as I say, we'll find out on the 31st of May what the uptake on that is. We have had a question, so we do know there is interest, and so we're not completely petrified that it's going to bomb, but hopefully that explains the reasons why we took the approach that we have taken. It's basically due, on the bottom line is it was due to organisations approaching us and saying, please put something out that we can respond to, because we're desperate, to spend, to fund these projects and meet our own objectives. And it was the only way we could see to get some tempo and momentum into the Great North Bog, and start doing things. We're trying before this September. We've got 15 million pounds that we've bid for in nature for climate restoration funding, which will deliver over the next couple of years, which any organisation coming to the Great North Bog will actually have access to those carbon credits. So we're also offering if we get those grants from Natural England, we're also we're offering a 15 million kickstart, if you like, for those organisations to start having access to those carbon credits. So conscious on time, I'll shut up and let you ask some questions.
Yeah, thanks, Tony. So we haven't got long at all, and I know since there are a couple of questions that have gone into the Q&A and have been answered. Joel asked about how did Wilder Carbon determine their price for credits, and Sarah answered that. And then Karen Morley asked about, should you always go through a broker to sell? And I think we've seen some different models here. We've got Tony, who is fortunate enough to have a very large scale project where he can go out and get expressions of interest from buyers and have them almost sort of co-design the project for what they want, knowing that the landowners that they will be on board probably when they see the size of the ticket that's coming from buyers. Then you've got Sarah Mod Carbon, where you're signing up to like a standard and that they're working with buyers specifically and you register your project with them. And then you've got a model like Forest Carbon where you're working with a broker. So there's lots of different models. And of course you can approach your buyers directly, but earlier engagement is better. Before I just tackle a couple of these questions in these remaining minutes, Tony, I feel I might have misrepresented you earlier when I said that actually the buyer standards that Wilder Carbon and Sarah just walked through might be more stringent than what you're looking for from a buyer. So I wonder if you could just sort of mention, do you have that same sort of view of a lens of, as you're working with buyers, they need to be X, Y, Z?
Yes, we do, but also we are, I think, you know, I'd be not being completely honest if I said that you know, having spoken to Sarah at the previous conference, I think we have got a little bit of a more liberal attitude about it. I think Chris Woodley-Smythe at the last conference stood up and said, I won't sell to arms dealers, drugs dealers or people traffickers, but anybody else is on the you know, is on the table, and we'll look at it on a case-by-case basis. So you know, we are very cognizant of, we need to make sure that we keep the integrity of the carbon markets, and that we do, you know, that we do the correct due diligence. But we will look at it on a case by case basis, because, you know, just to give a very quick example, you know, we get a big chunk of money every year through 3 water companies, Severn Trent, United Utilities, Yorkshire Water, through their asset management plan projects that we in their catchment areas. And that is, you know, now we're out of Europe, that is sort of, you know, we're talking in the region of, you know, 5, 6, 7 million pounds, you know, over a couple of year period, and that's going to be even bigger in AMP8. Well, anybody could pull one of those water companies apart for some of the things that we do, but it's accepted that we're allowed to use that money for restoration and conservation. We've got a large corporate multinational within the boundaries of the national park who is also, you know, going to be funding one of our restoration projects, and, you know, and I'm sure that they're not, you know, squeaky clean. It's very difficult to stand up, and I think somebody else said that, you know, you could put any organisation in the world up as the top organisation that we should all be working for, and somebody somewhere will be able to pull them down and say, well, actually no, they're you know, they're not doing it. I think we've got to, you know, we've got to look at where you get the best bang for your buck, but whilst also being cognizant of making sure that we keep the integrity of the carbon markets and the nature and biodiversity markets. And we don't know the answers, and I will always defer to partners. You know, I'll be happy, you know, when we start doing this, you know, be happy to speak to people, to Sarah at Wilder Carbon and you know, and other organisations that are looking after the, if you like, as a standard bearers of the integrity of what we're doing, and make sure that we are getting it right, you know, because we do see that importance.
Brilliant, thanks, Tony. Just thanks for clarifying that. So we've literally got 2 minutes. There's a question, I know it's been coming through Phoebe, that if it's all about story and brand positioning, then why they're more interested in the credits than standard CSR donations. I'm just going to answer from what we've seen, but I know Sarah's typing in the answer. And that is because actually it shows the actual outcomes. It's actually evidence-based. And we're seeing that a lot, actually, with the whole idea of if biodiversity credits take off, and we hope that there'll be net gain and not offsets for biodiversity credit. That's the discussion at the moment. That there have been a couple of trades already. GSK actually bought some, which is quite early to be buying biodiversity credits, because, you know, we don't really have a formal standard for them globally. But they did so just out of a CSR play, but because there was some methodology around it, there are methodologies being built up for biodiversity credits. But that's what we're hearing personally all the time, is that voluntary markets work because they actually offer a methodology that shows an outcome that's better than just writing a check as a grant and hoping that it does well. So I'm just going to say that. Any sort of things that Sam, Sarah or Tony, that you've heard from the discussion or seen ping up in the Q&A in these last 2 minutes? I know there was a lot coming up here today that you want to comment on, because we'd love your final comments. Sam, do you want to go first?
Yeah, I guess a point that is obviously been raised around the kind of vetting and due diligence of clients. I think it's one For us, that's obviously created a kind of lot of internal debate and the morality issue, but it's one that we sometimes kind of pass on the onus to the projects themselves and say, like, look, do you want to open yourselves up to potentially a larger audience and get money in more quickly, or are you wanting to kind of vet the buyer and potentially you may not get income in the near term? So we often kind of put that on them to allow the decisions, and I think the same is true the opposite way around, where the people that own potentially land in the UK, there's a grey area around the additionality aspect of these are wealthy people and again may not potentially have a squeaky clean background. So it's a morality issue in how do we scale up as quickly as possible, but doing it in a way that we can kind of ethically stand behind as well. So
thanks, Sam. It's great. Great point there. Sarah, any wrap-up thoughts? I know we're like literally at time, but I just wanted to give you a chance because I know we haven't had much of a Q&A back and forth.
I think we can do both. We can do both. There's money out there and we can use it in the right way. I think, you know, if it's all about transparency, and I think even, you know, the landowners that you just mentioned there, Sam, if they're now following a process by which they're questioning their own emissions and following that mitigation hierarchy, then why not? Why can't they sell carbon units? You know, it's just about transparency around how people are doing it to show that it's done in the right way.
Thank you. And of course, the transition plans are so helpful, and it's very early for companies. There's no such thing as a nature positive transition plan. We still don't have nature positive, so sort of helping getting them on that journey. It's a good point to remember. I'm going to leave it there as we are 1 minute past, and I promise this is only an hour and of everyone's time. So just a really big thank you to Tony, Sam and Sarah for coming on and sharing with us these voices, sort of taking a bit of a different route, I thought, which was really interesting about sort of thinking about buyers and morality. Love it. But this is recorded. You'll be able to access the recordings. So those questions, the answers that have been posted, we will put those together on a one-pager and send back to you if you registered for this webinar, and a reminder to sign up for the clinics if you haven't already, and that will be sort of specifically talking to NatureScot and ScotGov about your application process. So it's just very in the weeds on the process. But with that, just a huge thank you again for your time. It's been really great for us to be part of this engagement process so far. So I will leave you all to a lovely afternoon. Thank you.
Thank you.